Are you a trader in the markets and you're currently dealing with inconsistent profits? You're typically guessing when you're entering your trades? If that sounds like you, this video is going to be a great help. My name is Professor Wasi of Option Snipers University, and I've been trading for about a decade now. And what you're going to be watching in this video is essentially how you're going to be able to systemize your ability to enter, manage, and exit your trades in the markets, okay? Now, this method is called the traffic light method, okay? The traffic light trading method, where you're going to decide to master 3 different components of your trading in order to create consistent profits. All right, guys? So, without further ado, let's go ahead and get right into the video. So, the goal is to establish specific criteria for entering, managing, and exiting trades. This is going to allow us to reduce the guesswork and create consistent profits. All right? So, here we have our 3 different lights, okay? We have our green light, which is us mastering entering a trade. We have our yellow light, which is mastering managing a trade, okay? And then we have our red light, which is mastering the exit of a trade, okay? And we're going to talk about the complexities of all 3 of these. Then we're going to essentially put it into practice, see if we can learn a few things today together, all right? So, traffic light analogy is very simple. The green light means go, okay? So that's how we're going to be entering our trade. We're going to master that. Then we have the yellow light, which is caution, okay? Caution means be careful, watch out for what's to come, okay? So that means we're going to be managing our trade with the yellow light, and then the stop light is the red light, okay? Exiting a trade. Now, exiting a trade looks like either exiting at a minimal loss or a maximum gain, and we're going to decide between the 2 of those as we go through this video, okay? So, first things first, I'd like you guys to go ahead and like this video, share this video, and even subscribe to our channel. Make sure you hit that subscribe button and also the notification bell so that you can get more videos like this, okay? So, let's go ahead and get right into it. Now, we have the green light, okay? Green light is how we're going to be mastering entering a trade, okay? Now, we have our checklist for entering a trade. We need clear technical signals, okay? Now, how do we identify technical signals? Well, with us here at Option Snipers University, we actually have different setups and strategies that we teach our students that gives us high probability plays in order for us to make consistent revenue and profits in the market, okay? So, there are different components to this though, and that's what we're going to be going over, okay? We're going to go over an example of that as well. Now, one of the things that we typically keep in mind is the idea of volatility and volume, okay? If there's no volatility or volume in the market, we are literally not entering a trade, okay? That's a part of the green light method. Do we even have volume in the market? If we don't have volume, we're not going to be in a scenario where we know potentially where the trend is going to be going. Because at any given point in time, either the buyers or the sellers can take control and take it against whatever way we believe is supposed to be going in the market at that given time, okay? So we always need volatility and volume, okay? So that is the green light, okay, guys? The green light allows us to say, once we enter into this trade, there is a specific way that this trade is supposed to go, okay? Now, your entry is the most important of all 3 lights, specifically because when we enter into a trade, we then have the ability to then set our stop loss and our profit target, okay? Now, we can potentially have 1 profit target, 2 profit targets, 3 profit targets, just depending on what the play allows us to see, okay? But anytime we're entering a trade, we should have the full awareness of where the trade is supposed to be going, if it's in our direction versus out of our direction, okay? If it's in our direction, then we're going to be simply continuing to hold the trade until it shows us a direction that is not ours, right? Especially if we've not yet reached the profit target, okay? Those are the things we want to look at as far as entering a trade, okay? Now, the next thing we have is managing a trade, okay? Managing a trade. Managing a trade is the yellow light. So after we've now entered the trade, okay, now we're talking about managing it. And managing the trade looks very simple. Are we following the current trend in the market at that given point in time? Okay? If we're not following a trend, then we're potentially going the other direction. Okay? So this means that we're potentially between our stop loss and our take profit. While we're between our stop loss and our take profit, we're looking for other indicators to see whether it's going our direction or not. Do we still have volume? Do we still have volatility? We're going to be seeing that as we go over the example, okay? That's going to be the red light. Do we make stop loss adjustments? Are we using a trailing stop? Okay, those are the things we need to learn and think about when we're talking about managing a trade, okay? Sometimes it's possible that we may want to take incremental profits as well, based on maybe waiting for the trade to take its full turn. Okay, we might want to just take off our profits. Those are things that we need to think about when we're talking about managing a trade. Okay, we need to master that. Okay, and then lastly, we talk a little bit about exiting a trade. Okay, now at first when we enter a trade, we have the idea of our stop loss and our take profit. Now when it's time to exit a trade, all we're simply saying is sticking true to our word. If we have our stop loss set and it's looking like it's about to trigger our stop loss, that's not where we cancel our stop loss, okay? Because if we do that, then the trade can potentially continue to go further past where we thought it would go, which would then have us incur an even larger loss, okay? We want to make sure that we stick to our stop loss. And then also, when we're about to hit our profit target, we can potentially say, okay, maybe we can decide to take a few of our profits and let some of the other contracts continue to go to create more profits or potentially hit a different profit target. Okay, that's also at our discretion when we talk about exiting a trade. Okay, those are the things we need to discuss. So without further ado, let's go ahead and get right into the charts. Okay, how does this look like in practice? Those are the questions we're asking ourselves. Okay, so currently looking at the chart here, let's look at a potential play, okay? With this play, we'll call this play a double bottom play, okay? One bottom, two bottom, okay? Now, with a double bottom, typically a double bottom has bullish momentum, okay? What a double bottom does is it has one bottom, and then the second bottom would be higher than the previous low, okay? The second low would be higher than the previous low. So what that means is to say, after already seeing that we got this low, once we came up to this level of 5,700, then came back down, we would have wanted to monitor whether this low was going to approach the lows that we had all the way down at 5,300. Okay, and since it didn't, we would potentially believe in a bullish move. Okay, now what does that mean? That means this. If we're in a scenario where we decide to grab calls or buy orders at this level, the reason as to why we are, right, our green light is to say, what's the trade criteria? Why are we entering this trade? Okay, the reason why we're entering this trade is because we believe it is a double bottom setup, okay? A double bottom setup meaning we hit one bottom and then we're getting another bottom, okay, before it goes back up to the upside, okay? So if that's the case, what we're looking at is we're looking at the previous bottom, right? So entering this trade, the green light means that we're looking at the previous history and seeing how low we went, and that's how we're going to be signifying our stop loss, okay? So our stop loss is going to look like being down here at 5,200, okay? So 5,200 is our stop loss, right? Now, 5,200 being our stop loss would then mean that 5,700 is our take profit, okay? 5,700 would be our take profit. That's if we enter into this candle, okay, guys? That's if we enter in right here, okay? So that's our green light. Now, after the green light, we're looking at the yellow light. So the yellow light is saying, who are we touching first? Are we getting down to 5,200, or are we going to be rising up all the way to 5,700? Okay? That's the question we're asking ourselves. Now, what it looks like is that obviously we had bullish momentum and we never even got below 5,400. So our yellow light was pretty simple for us. We didn't really have to manage our emotions because we never entered this area or below the level in which we believe it was supposed to go if it was going to go downside. Okay? So that simply meant that we were going to wait for it to continue to grow to the upside, right? That's our yellow light, managing our emotions in that manner, okay? So then our red light became taking profit, okay? Now, taking profit for us looked like taking a gain to the upside because we never got down here, right? So once we came to the upside here, what we're saying is we could either take profit at this level at our first profit target, right? Or we can decide to hold our trade, maybe even potentially employ a trail stop to take it to the upside and exit the trade, okay? That would be our red light, okay? So again, green light is saying, why are we entering a trade? Well, we're entering a trade because of a double bottom. It no longer is a double bottom. What? If it goes below the first bottom. That is not what a double bottom allows us to do. A double bottom should not go below the first bottom, okay? So now that we know it is a double bottom, that means we are confident in our ability to go to the upside. And here's something that you need to remember in the markets. Confidence is what creates the cash flow. Go ahead and write that down. Confidence in the market is what creates the cash flow. All right, guys? So every which way you need to make sure that you're honing in on mastering how to be confident while you're in the markets, okay? So because we never go down, we are now managing our trade, watching it go up. We now passed the 9 EMA, which is this red line here, okay? And so we continue to go up, right? Sorry, the 50 EMA is the red line. The yellow line is the 9 EMA. And since we crossed above the yellow line, if all we did was just say we're going to be trailing the yellow line, which is the 9 EMA, until we break below it, and then take profit here, that could also be a way for us to take profit. All right, guys. So that's essentially how we put the yellow, red, and green light into play. Okay. So every which way, you need to make sure that your green light is allowing you to show and give evidence as to why you're entering a trade. Then you need to come up with the idea of how your setup then becomes invalid. Okay? And the reason why you want to find that out is so that you can be sober-minded about your ability to take a small loss. Okay? The reason why a lot of you guys are taking bigger losses is specifically because you didn't believe the first signal of you taking the smaller loss, right? It's almost like the first red flag in a potential relationship. You ignored the first red flag, and before you knew it, you spent too much time in that trade, too much time in that relationship potentially, where it didn't go your way, right? So you just want to make sure that you respect the market for what it's showing you so that you don't fall into that type of trap, okay? Again, we have a checklist for each step: how to enter a trade, how to manage it, and also how to exit that trade. All right, guys? Now, if this video helped you out and you would want to learn more, if you're potentially a newer trader or even a business owner, potentially looking to inject more cash into your business, doing trading from home, then go ahead and click the link below, okay? We have some special offers for you guys to learn from us. You potentially would even get on the phone with someone like myself or some of our other master traders in our community that can give you the strategy that can allow your profits to be consistent in the markets. All right, guys? So I hope this video helped out. Now go ahead and like, share, subscribe, do all the fun things, and I'll see you soon. Peace. Hey, what's going on? This is Wasi of Option Snipers University. Are you a business owner or potentially nearing retirement and you're looking to learn a new skill set from home? We believe that this trading community is specifically for you. We teach our students how to trade and hold their hands within the market live on Monday, Wednesday, and Friday each and every single week so that we can practice maximizing our gains while minimizing our losses. If this sounds like something that you would like to do, go ahead and click the link below and join our community. See you soon. Peace.